Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll speak about the general trade setup. And it's looking decent as far as most of the Asian markets are concerned. All of them are trading with a positive bias. The SX Nifty has moved into the positive. It's trading with a positive bias of almost 11 points. So it'll be interesting to see whether we will be able to sustain the 10,400 mark in trade today. As far as ADRs are concerned, most of them did well. IT benefited because of a weakening rupee. That is why Infosys and Wipro were up in trade. Vedanta continues its good run. What didn't do well was Dr. Reddy's and Tata Motors. Both of them were down close to 1%. Now, as far as the crude cues are concerned, extremely strong close by crude yesterday. Overnight, crude was up almost 1.7%. You can see Brent has actually moved above the $66 barrel per mark, and WTI is also trading with a positive bias currently. So that's the view that's coming in on crude. As far as base metals on the LME is concerned, weak closing by base metals, except for copper, which was up almost 0.6%. The others were down anywhere between, almost 0.11% to almost 0.7%. But China has opened, and it's a strong rally in China for commodities. Take a look at copper, which is up almost 1.4%. Zinc is up almost 1%, and aluminium is up almost 1%. What is not doing well is steel rebar, which is down 0.6%. Rubber also seems to be trading with a positive bias. As far as precious metals are concerned, there seems to be a little bit of recovery that's coming in. Gold, however, is trading flat in trade, but the other metals have managed to recover. Now, yesterday was expiry, so volumes were expected to be huge, and a huge sell-off by FIIs. They sold in 2,300 crores in the cash market. DIs bought in 1,000 crores in the cash market. So if you see the month to date itself, FIIs have sold in almost 7,300 crores in the cash market, while DIs have been aggressive buyers. They bought in 12,300 crores in the cash market. Now, some of the sectors that you need to watch out for: the Nifty Bank ended flat in trade, but they were selling on the mid cap and small cap end. You could see there was selling that was happening. As far as the VIX was concerned, since the market was doing well, the VIX was down almost 7% in trade. Which were the sectors? Since the rupee was trading at an extremely weak level, IT and pharma benefited, and because of pharma, Sun Pharma and Aurobindo, there is news in terms of the inspection, which is expected probably today. Ahead of that, there was traction that was seen. The Nifty oil index was down almost 1% in trade. Now, let's take a look at what happened with the Nifty. The Nifty was down marginally, just 15 points. But basically, Maruti continues to build. Reliance was an ONGC from the oil space were rather weak. And what caused the traction? The IT, pharma, as well as private banks, they did well in trade. But Agam, what are you hearing?
Well, a consolidation continues on the Nifty. As you can see, not too much has changed when it comes to the underlying. However, there's big changes, and naturally, considering we are moving into the new series, which is why we're looking at an increase, a substantial one in the open interest for the March futures, and it is the same for the Bank Nifty as well. If you consider the way things are panned out, very little change in the underlying, but open interest surges. Moving in, when we consider something like an India Volatility Index, that's moved off and that's come off quite substantially. And now below the mark of 15, this may be a positive when it comes to those who are long in the market, because, a lack of volatility in anticipation of that. Current put call ratio currently stands at around 1.18. Not too much has changed there. Surprising considering we just saw expiry yesterday. That said, there's been a lot of consolidation around the 10,400 mark. So we've seen more writing in the call, and the 10,400 put has seen more unwinding coming along. We also have some stocks that we'll be watching out for. Biocon, which has seen fresh longs, and along with Biocon, we're also tracking something like a Kotak Mahindra Bank, which has seen fresh longs with accumulation across all series, and IT, the natural beneficiary of a strengthening dollar to the rupee, is also up and about. So Mindtree is one of them, and we've seen another 2% increase there with fresh longs building in. But that's as far as our markets are concerned. In the US, Warren Buffett will deliver his annual letter to Berkshire on Saturday, and it is expected to hold more clues about the 87-year-old master investor's succession plans. In January, he named longtime executives Ajit Jain and Greg Abel as vice chairman, which has led to speculation that they are in the running to be his successor as CEO. Bloomberg's Catherine Chiglinsky brings you more in this report.
We'll be looking Saturday when he releases the annual letter. I mean, he's praised them before in letters he's sent out to shareholders, and any reference to them this time might have a little more meaning than it has in the past too.
Right, I'm sure, people will be looking for anything short of an announcement, essentially, of who the CEO is. What about some of these other topics? I mean, we always hear Warren Buffett talk about the economy, stocks, obviously his businesses. What about tax reform? Are we going to likely hear some more comments about that?
I think we will. Tax reform is obviously a huge thing this past year. He's talked a little bit about it. He's said overall it's been good for Berkshire. It obviously means they can sort of keep more of the profits, and that should be good for investors. It'll also be interesting to see how it plays into their book value. A lot of analysts are expecting that to increase by a lot, and that's one of Buffett's kind of favorite measures of the growth of his company. So we'll be tuning into that. That would be very interesting.
Catherine, he's also called healthcare costs a tapeworm on the U.S. economy. We heard about this joint venture with Amazon and JP Morgan. Are we expecting to hear some details in the letter?
I think people are really interested in any details he might provide about this venture. It's been a little kind of quiet on what exactly this might entail. Obviously, it involves Amazon, JP Morgan. People have speculated that Todd Combs has played kind of a crucial role in it. He's one of Warren Buffett's investing deputies, who's also on the board of JP Morgan. So we'll be looking for any clues on who might lead this venture, what it will actually sort of entail between these three companies.
Well, let's have a look at the commodity space, starting off with oil prices, which are trading flat in early Asian hours, but spiked nearly 2% overnight. Now, this is on the back of surprise inventory data that we got overnight, where the inventory actually declined as much as 1.6 million barrels, and that was the biggest decline that it saw in over 5 weeks now. Now, this was against the Bloomberg estimate of an inventory buildup of nearly 3 million barrels, so that's the positive coming in for oil prices. Shifting focus to the base metal space, most of the base metals declined on LME except for copper. Copper traders are actually split on the price outlook after the Chinese market has resumed trade. And on the other hand, we had global aluminium production, which hit its highest level in over 7 months. And aluminium was the top decliner in trade on the London Metal Exchange. However, if you look at the Shanghai Futures Exchange, most of these base metals are trading with a positive bias, except for steel, which is trading lower for the second day. Copper is up 1.5%. That's the best performer in trade, while zinc and aluminium too are trading with mild gains. As far as gold prices are concerned, we saw some stability come about for gold prices near the 1330 mark. Now, there was a Bloomberg survey that suggested that once again traders are split, wherein the bullish number of analysts were 4, the bearish analysts were 5, and neutral were pegged at 4 as well.
Among the stocks that will be in focus today include some of the companies which reported their earnings after market hours yesterday. 2 MNC companies which came out with a good set of numbers, starting off with Sanofi, where the company's revenues for the December ended quarter grew by 11% and a net profit by a much larger 43%. Even as far as the operational performance is concerned, the EBITDA came in 23% higher and the margins were bumped up by about 200 basis points. Merck is the other company which reported the numbers, 30% strong jump as far as the top line is concerned, and the net profit grew by 42%. But operationally, it lagged the top line growth, with EBITDA coming in at about 30% and EBITDA margins rising from 9.4% to 10%. But it was mixed set of numbers as far as KSB Pumps is concerned, because the revenues grew at a sharp 31%. Net profit, however, came in at a lower 17% growth. Operationally, the EBITDA grew by 12% and EBITDA margins, however, rose to about 15.1%. That apart, we are also tracking Federal Bank, wherein the board has approved acquiring a strategic minority stake of 26% in Equirus Capital, which is an investment bank. And this is for an undisclosed amount, but largely analysts believe that this is a positive a step, given that the company will be able, will be able to expand its product offerings and increase its share of fee income from this venture. We're also watching out for the Bilcon, yet another EPC project win, this time a 157 crore order in Karnataka. Adani Transmission is another one which will be in focus today as well. Now they have received a letter of intent for one interstate transmission project in Rajasthan, so they're expanding their presence in that state. They already have about 2 operational assets and about 3 or 4 under construction, so watch out for Adani Transmission in trade today. GE Shipping says that they have completed the sale of vessel contracted for sale in January 2018, so you could see some marginally positive reaction there. And lastly, on the back of an ET report, Axis Bank is going to remain under investor focus today because the report says that the CIO Amit Sethi was asked to resign, and this was on the back of whistleblower complaints, and this is more to do with allegations of irregularities as far as the technology system is concerned, so watch out for that name as well.
The NPPA came out with a report on private hospitals in Delhi, which was actually nothing short of tearing into those hospitals for unethically overcharging for drugs and other consumables all across Delhi and NCR. Now, this comes in the backdrop of complaints being filed by relatives of deceased patients who claimed rather that they were overcharged exorbitantly for several drugs and other consumables by the hospitals, and even after their relatives died in those hospitals, the bodies were not released for days at a stretch. Now, the NPPA in its report clearly showed that some of these hospitals that the report is on, 4 hospitals in Delhi NCR, were known to be having margins of as high as 2,100%, which is 22 times of the price at which they would have bought those drugs and consumables. This goes particularly for syringes and cannulae. These prices go up that high. Apart from that, NPPA also mentioned that these hospitals were charging higher rates for diagnostic services as well in their hospitals compared to other private diagnostic centers in the city. Apart from diagnostics, also what hospitals were overcharging for and actually making more margins and more profits out of was in-house pharmacies that most of the hospitals maintain these days, which NPPA said charge way higher rates compared to other pharmacies across the city. Now, NPPA mentioned all these points and said they were monitoring the situation, but when it goes to the powers of the NPPA, they do not have any powers actually to take any action against these hospitals.
TRI came out with its adjusted gross number revenues yesterday in the evening, which helps us to calculate the revenue market share of a telecom company. Now, according to this data, the Reliance Jio has not only become now the 3rd largest telecom service provider in India, but is just 90 basis points away from becoming the 2nd largest telecom player in India. Now, according to the data, there is the adjusted gross revenue, which is gross revenue adjusted for interconnect usage charges and other deductions. Bharti Airtel's revenue market share stands at around 27.96%, while that of Vodafone India and Idea Cellular stands at around 20.6% and 17.3%. Now, Reliance Jio's market share is close to 19.7%, while that of smaller players like Tata Teleservices and BSNL stands at 4.4% and 3.35% in the 3rd quarter of financial year 2018. Now, surprisingly, compared to the last quarter, if you see, Vodafone India and Idea Cellular have seen an increase in the revenue market share. Now, Vodafone India's revenue market share increased from 20.5% to 20.65%, while that of Idea Cellular from 17.26% to 17.33%. Now, though this is a marginal increase compared to the last quarter, it is better than the 80 basis points fall that Bharti Airtel saw in the 3rd quarter of financial year 2018. Now, Bharti Airtel's revenue market share fell from 28.77% to 27.96% in the 3rd quarter of financial year 2018. Now, if you see of the smaller players, Tata Teleservices saw a fall to 4.39% from 5.42%, while BSNL, as a state-owned company, market share fell to 3.35% from 5% reported by the company in the last quarter. Now, if you see in the 3rd quarter of financial year 2018, the telecom sector as a whole saw 11% drop in its adjusted gross revenue. Now, this is the highest fall that the sector has seen in the last 3 quarters. Now, as of 3rd quarter of financial year 2018, the adjusted gross revenue of the telecom sector stood at around 27,391 crore rupees. Now, if you see company-wise, other than Reliance Jio, all other companies saw a big fall in the revenue, adjusted gross revenue. Now, Bharti Airtel saw the highest fall among the top 4 players. The company's adjusted gross revenue fell by around 13%, while that of Vodafone India and Idea Cellular fell by 10% and 11%. On the other hand, Reliance Jio's adjusted gross revenue increased by 27% to 5,407 crore rupees in the third quarter of financial year 2018.
Well, online grocery startup Grofers is in final stages to raise close to $75 to $80 million in a fresh round of funding led by one of its existing investors, the SoftBank Group, and according to two people familiar with the development. Now, one of the people told me that this round will value Grofers at a valuation of close to $310 million, which is close to 10 to 11% lower than its previous valuation when it raised $120 million way back in 2015, and at that time it was valued at $350 million. Now, existing investors such as Tiger Global Management and Yuri Milner's personal investment vehicle, Apollo, will also participate in this round of funding. However, Sequoia will skip this investment round. Now, people aware of the deal also told me that SoftBank Group is looking to infuse close to $60 to $65 million alone in this investment round. Now, the proposed deal is set to give much needed ammunition to Grofers, which is locked in intensive battle with its biggest rival, Big Basket, which just weeks ago raised close to $300 million in a round led by the Alibaba Group.
On to some stocks to watch based on the delivery buying and selling as of yesterday. First up, we have Biocon, which was down nearly 7% in trade and saw delivery selling in excess of 150 crores. The delivery volume jumped 3 times at nearly 26 lakh shares as compared to its 5-day average, and the delivery volume surged, total volume surged about 181% at about 1.5 crore shares as compared to its 5-day average. Now, the second stock to watch out for would be PC Jewelers. That was down more than 5% yesterday and saw delivery selling in excess of 140 crores. The delivery volume more than doubled at about 42 lakh shares as compared to its 5-day average, and the total volume shot up just 8% at about 1.6 crore shares as compared to its 5-day average. Last and final stock to watch out for, Adani Ports. That was up more than 2% and saw delivery buying of more than 100 crores. The delivery volume shot up more than 150% at nearly 26 lakh shares as compared to its 5-day average, and the total volume surged as much as 85% at about 49 lakh shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Deutsche Bank on Siemens. Now, the brokerage has maintained its sell rating on the stock with a target price of 1,030. Now, the company sold its mobility business to its parent company, and according to the brokerage, the mobility business was separated just before a potential uptake. Now, the mobility division was a growing division and had good growth prospects given the fact that railway and metro capital expenditure was picking up in India. Now, according to the brokerage is expecting the company's EPS to grow, net profit to grow at a compounded annual growth rate of 26% over FY 17 to 20, and lastly it says that it has maintained its sell rating on the stock because of the steep valuation. Second we have is Goldman Sachs on Avenue Supermarts. Now, the brokerage has maintained its buy rating on the stock but have raised the target price to 1,672 from 1,611. Now the brokerage is expecting Avenue Supermarts to open around 24, 28 and 30 stores in financial year 2019, 2020 and 2021 respectively, versus 18 stores opened by the company every year earlier. On the back of most new stores, the brokerage has lowered its same store sales growth estimate to around 11.6% from 12.3% for FY 19 to 21. Now, as a higher number of stores will also lead to some cannibalization, which could lower the SSG estimate of the brokerage. Third we have is Jefferies on Federal Bank. Now, the brokerage has maintained its buy rating on the stock with a target price of 145. Now, the bank has acquired 26% stake in Equirus Capital, and according to the brokerage's acquisition augurs well with the bank's strategy of building a corporate and institutional banking team. Now, the bank is significantly capitalized and can easily pay for this acquisition, and according to the brokerage, the primary synergies lie in broadening product offerings to corporate and SME clients. Lastly, the brokerage says that steady loan growth, leverage optimization, improving loan mix and improvement in operating efficiencies could lead to a gradually rise in its profitability.
There are mainly two reasons why we think so. First of all, based on our fundamental valuation model, the dollar is still about 10 to 15% overvalued. Secondly, we still think that markets, and I'm not talking about only hedge funds or CTA accounts here, but the broader market positioning, including central banks, including corporates, including real money funds, is still long dollars. And that will probably change at some point this year. In the last few years, what we have really had is US was really the only growth story. That's not the case anymore. We have already seen European growth pick up. Japan has had its longest expansion in almost 30 years now. In a synchronized global growth recovery story, you don't really want to hold a currency which is both overvalued and also where the positioning is already long. I think that's the broader framework that we are looking at, which is probably going to drive the dollar weaker from here. Of course, the fiscal stimulus argument still means that the twin deficits in the US are going to be wider this year, which means investors are going to put a lot more focus on fundamentals for the US. So overall, we still think that it's going to be a weaker dollar environment broadly for the year.
Yeah, you're still quite positive when it comes to euro dollar as well. You're expecting 132 by the end of this year, but hasn't that kind of shorting the dollar through the euro very much a crowded trade now? 2017, it seems like 2018, a lot of people are saying if you're going to short the dollar, it's going to be the yen, given just how cheap it still is.
Well, actually, we disagree on that. We still think that there's significant upside for euro. Last year, what we had was essentially a reallocation towards European equities. We saw about almost $500 billion going into European equities. And what we have now is that the flow picture for the euro area has turned quite positive. And we're still sitting at a situation where central banks' reserves are still, allocation for the euro is still quite low. We've gone from euro share in global reserves from about 28% 6 years back, now down to 20%. And that in itself will provide another $250 to $300 billion of additional euro buying coming through at some point. So we still think that euro has more upside. In terms of yen, I think the market is probably getting a bit early or bit ahead of itself in terms of expectations from the Bank of Japan. We do not think that the Bank of Japan is even close to changing its policy. They are very comfortable with the way things are. Inflation is picking up slightly, growth is looking slightly better, but there's really no rush for the Bank of Japan to tinker policy at this stage. So you still have a very wide interest rate differential between the US and Japan, which at some point is going to look extremely attractive for Japanese lifers, for example. So I think that demand will probably come back and will keep dollar yen relatively supported. So as a cross, we still think that euro yen has a lot of upside for this year.
Right, and that last point about insurers or life insurance companies, possibly buying up treasuries in anticipation of more issuance coming out here in the U.S. That's actually one of the reasons why Terry Wiseman, who joined us earlier from Macquarie, he actually sees that the bullish traction is going to continue for the dollar. He's on the opposite side of you, thinks actually the dollar is going to be bid up. Is it possible that kind of buying, the asset allocators buying up U.S. Treasuries, that might actually happen sooner than later and might have a bigger impact on the dollar?
Well, we definitely think that it will have an impact on dollar yen, but I think the broader dollar is still going to be dominated with what happens with the euro and what happens with emerging markets more broadly. And we're still looking at a very synchronized, very strong global growth dynamics. Global trade is still looking extremely positive. And in that kind of environment, you really think that the dollar more broadly is going to struggle, even though dollar yen might be supported by some flows coming through from Japanese lifers.
It's nearly the weekend, but there's lots that you can look forward to today. The discourse about the Punjab National Bank fraud will continue, and there's also the live market action that you'll find right here on Bloomberg Quint Live. There are also a few stories that you should consider reading on the website, though. That's bloombergquint.com. First up, the Singh brothers, Malvinder and Shivinder, accused of financial irregularities at both companies promoted by them, those are Fortis Healthcare and Religare Enterprises, have said that they need some time to resolve complex issues facing both their family and their businesses. The founders sought time from stakeholders to present facts that will allow for what they say are balanced views. The fraud at Punjab National Bank appears to have broken the steady run for the rupee, inducing some volatility into the Indian currency markets. However, the sharp drop in the forward premium for the dollar-rupee pair is what is drawing the attention of the currency market. The sudden drop is pointing to a sudden rise in dollar demand, according to Anant Narayan, who's professor at SP Jain Institute of Management. And according to a PTI story, the government has prepared 4 separate options for the proposed stake sale in Air India. This includes retaining 49%, 26%, 24%, or selling its entire stake. Well, that's all you need to know going into trade today, but as I said, there's a lot more to look forward to on Bloomberg Quint. Up next is Indian Open, and it'll take you through Market Open. Thanks for watching. This is Bloomberg Quint.